Hey everyone, welcome to our Rapaport Market Roundup for the week ending February 3rd. That's right, it's the beginning of February already, and we'd usually expect trading to have picked up by now, but the diamond market remains relatively slow, and that's mainly due to US economic uncertainty as reflected in a drop in consumer confidence during January as reported by the Conference Board, and also as we wait for China to really get back to business after all the lockdowns and of course the Chinese New Year that just passed. Now, last week we reported jewelry sales being flat over the holiday season, and that was an oversight on my part for which I apologize. The Edge Retail Academy in fact noted that US jewelry sales among independents fell about 9% in the fourth quarter, but were flat for the full year. Again, putting the year into perspective and given the strength of the comparable performance in 2021, I don't think it's too bad. But we do need to be aware of the slowdown in the second half and keep an eye on the extent to which that will continue this year and the factors influencing the market at the moment. But there are pockets of strength. The major luxury brands continue to report stellar growth. A record year for Tiffany & Co. boosted LVMH's watch and jewelry division, with revenue up 18% to $11.5 billion for the year and an increase of 7% in the fourth quarter. There's also rising optimism for China, where reports indicate pent-up demand for luxury purchases over the Chinese New Year. But I think the main theme at the moment in the market is that everyone is carefully watching their inventory levels. No one wants to be stuck with excess stock in times of uncertainty as we're experiencing at the moment, and that applies to businesses across the pipeline. Jewelers aren't buying the way they usually do in January. Manufacturers and dealers still have large volumes of goods in their safes, but predominantly of older stock that's difficult to move, and so polished prices continue to decline. The Rapnet Diamond Index, known as the Rappi, for 1 carat diamonds fell 0.9% in January, with most of the declines occurring in the final week of the month. Small stones are stable, that's melee up to even 30 pointers. In fact, the Rappi index for 30 pointers rose 3.1% during January, while inventory on Rapnet of that category dropped about 35% in the past year. Lower supply is feeding into firming prices. Still, manufacturers are refraining from making large purchases of rough. The De Beers January site was valued at just $450 million, whereas January is typically the largest site of the year. De Beers' outgoing CEO Bruce Cleaver noted that in the buyer allocation set for this year, site holders are putting a greater weight of goods to be purchased later in the year. They're maintaining lower production at the moment. So it seems there are a few anomalies playing out in the diamond market at the beginning of 2023, and the trade continues to play a waiting game to time its purchase, when to go back into the rough market, when retailers will start to restock in a meaningful way. And of course, arguably the biggest challenge is for dealers when to buy and when to sell their polished and at what price. Man, I love this industry. There's always so much action, so many factors influencing the market. I can't wait to see what happens next. For now, thanks for watching, and a quick shout out to our sponsors, Rapaport Auctions. Get the highest cash prices when you sell your melee and single stone diamonds with Rapaport Auctions. Upcoming sales begin on February 14th and 15th. That's Valentine's Day. Check out more on rapaportauctions.com. From our side, don't forget to subscribe, like, and comment. Have a super weekend, everyone, and we'll see you next time.